Luke Gromen recently sat down with Tucker Carlson to discuss the intricacies of gold and its role in the global financial system. He notes that global central banks have continued to hold their gold reserves, and in fact have been buying more of it, with a total of around $600 billion worth of gold purchased over the past 10 years. This is particularly interesting given the current era's focus on technology and digital currencies.
Gromen also points out that gold's physical properties, such as being easily divisible, not rusting, and being portable, contribute to its value. Additionally, gold has always been the most private of all currencies, making it difficult to track and monitor due to its physical nature. However, this lack of transparency in gold flows around the world is concerning, as countries can move their gold reserves without disclosing the details, leading to speculation and mistrust. Gromen suggests that the secrecy surrounding gold is partly due to its geopolitical nature, as countries may be trying to manage their currency systems and prevent gold from rising too much. The official rankings of countries with the largest gold reserves are also questionable, with China and India likely having more gold reserves than the official numbers suggest. The Fort Knox gold reserve is another area of concern, with some members of Congress calling for an audit for decades. The lack of a proper audit raises questions about the contents of the vaults and who owns the gold. Gromen believes that the difficulty in auditing Fort Knox is not due to complexity, but rather policy and the geopolitical nature of gold. In the 1960s, the U.S. was losing a lot of gold due to the dollar being pegged to gold at $35 an ounce. Countries were trying to redeem their dollars for gold, and the U.S. didn't have enough gold to cover its debt. This led to a shift in policy, and the U.S. eventually abandoned the gold standard. The secrecy surrounding gold reserves and movements continues to this day, and it's unclear what the actual state of play is.
Tucker Carlson pointed out that Saudi Arabia, one of the richest countries per capita, is not even in the top 10 for gold holdings.
Gromen revealed that Saudi Arabia owns a lot of gold, but it's not on the official list. This led to a discussion about the numbers being lies and how the U.S. has been trying to manage the optics of gold ownership. Gromen explained that after the U.S. closed the gold window in 1971, the government didn't want gold in the system. He mentioned a declassified document that showed the U.S. had an interest in getting gold out of the system, and instead wanted the Saudis to get treasury bonds. This led to the famous Bill Simon deal, where the U.S. provided protection, weapons, and access to markets in exchange for the Saudis not buying gold.
Tucker Carlson asked if it was possible that the U.S. gave country-specific interest rates on treasury bonds, to which Gromen replied that it's not something that's ever been disclosed. He shared that he's heard credible rumors from people who were around at the time that part of the deal may have been the Saudis getting a sweeter deal than other countries. The conversation turned to the topic of the CIA and how they might be involved in discouraging people from talking about gold. Tucker Carlson mentioned that the phrase conspiracy theorist was devised by the intel community to discredit people who asked uncomfortable questions. He wondered if the phrase gold bug wasn't a similar tactic to shut down discussions about gold.
Gromen agreed that it's possible and shared his experience working in investment research for 30 years. He said that many investment professionals watch gold and own it, but there's a stigma attached to talking about it.
Tucker Carlson shared a story about a famous investor who buys a lot of gold but doesn't want to talk about it publicly. The conversation turned to Warren Buffett, who has been critical of gold but has invested in physical assets like railroads and jewelry stores.
Gromen pointed out that Buffett's philosophy is about buying things with inherent value, but he's not against gold. In fact, one of his Berkshire letters from the late 1960s or early 1970s highlighted that Berkshire stock priced in gold had gone nowhere for 10 or 15 years.
Tucker Carlson noted that Buffett has received overwhelmingly positive press and has been promoted aggressively by the American media.
Gromen agreed that it's fair to say that Buffett is a hard asset guy who buys physical things with inherent value. Gromen notes that the bigger you are within the system, the more pressure can be applied to you, and this pressure can influence what you're willing to say in public.
Carlson agrees, sharing his experience in the media and how he's seen the promotion of certain individuals, like Warren Buffett, as a way to shape public opinion. Gromen believes that thinking critically about these dynamics is essential, and Carlson concurs.
They move on to discuss the flow of gold in the world, with Gromen explaining that it's currently flowing from the UK and EU to the US, with China being a significant recipient. Historically, the flow of gold has been an indicator of economic strength, with countries that acquire gold being considered winners and those that lose gold being considered losers.
Carlson asks if gold will ever be eclipsed by cryptocurrency, but Gromen thinks it's unlikely, at least not in the near future. He notes that Bitcoin could potentially compete with gold, but it would take a significant event, such as a new discovery of gold or a major breakthrough in energy production. The conversation turns to the topic of energy production and the Green New Deal. Carlson expresses skepticism about the ability of renewable energy sources to meet global demand, and Gromen agrees that the technology is not advancing quickly enough.
Gromen suggests that nuclear energy could be a solution, but notes that it's not being pursued aggressively enough.
Carlson asks if the great powers have a built-in incentive to keep energy prices higher than they would naturally be in a truly free market.
Gromen responds that different countries have different interests, with some, like China, wanting cheaper energy, while others, like the US, want Goldilocks oil prices that are not too high or too low. The discussion then turns to the potential consequences of a significant drop in energy prices, which could lead to a revaluation of gold and a restructuring of debt. Gromen notes that this could be beneficial in the long run, but would require careful management to avoid disrupting the financial system.
Carlson summarizes the complexity of the global economy and the interconnectedness of finance, energy, and geopolitics.
Gromen agrees, noting that rapid change can be problematic, especially with high levels of debt. However, he suggests that gold can provide a way to foam the runway for major changes, allowing countries to restructure their debt and adapt to new economic realities. Gromen also notes that the US is acquiring gold, but the reasons for this are unclear, with some speculating that it may be related to potential tariffs on British goods. The conversation then turns to the topic of the US's gold reserve and the possibility of it being revalued. Gromen notes that the US has a lot of debt, backed by nothing other than its navy, which may become irrelevant thanks to drones. Policymakers may be forced to sell off physical assets that belong to the country, such as oil, water, and gold. However, as long as the US is the world's reserve currency, it has the ability to print dollars. The question is, what if nobody wants them? The collateral for the US debt is complicated and includes goodwill, protection, access to markets, and the threat of violence. Gold is not thought of as collateral, but it could be used as a reserve asset if the US wanted to change the system. The US is not the only decision maker in this process, and other countries may force the US to change its system. There could be a grand deal discussed ahead of time involving the US, Russia, China, and Saudi Arabia. The war in Ukraine is not about Ukraine, but about the global balance of power. The US, Russia, China, and Saudi Arabia are all major players in the global oil market, and the US is trying to change the currency system that has been in place for 50 years. Gold could be used as a neutral reserve asset in this new system. The US is buying gold to try to turbocharge this change to the system. The Trump administration understands the problem of the US debt and the need to change the currency system. The US is trying to move away from a system where it supplies dollars to the world and towards a system where deficits are settled in something else, such as gold. US Vice President J.D. Vance has said that the dollar shows the hallmarks of a resource curse, where the US is the Saudi Arabia of money, producing the world's reserve currency but hollowing out its industries. This is a strategic risk for the US, and Vance has cited the US's inability to produce shells for Ukraine as an example of this problem. Gold is likely to play a role in this new system, and the US is moving towards a system where foreign capital flows are settled in gold rather than dollars. The US is experiencing a significant shift in its economy, driven by the recycling of global trade into gold and away from US financial assets. This change is expected to lead to an increase in the price of gold, making it a more attractive investment option. The current system, where the US is seen as the Saudi Arabia of money, has led to a parasitic industry of finance, insurance, and real estate, which has grown at the expense of other sectors. However, this system is no longer sustainable, and the U.S. is moving towards a more concrete economy with a focus on building factories, producing goods, and investing in infrastructure. The Trump administration, along with politicians like J.D. Vance, are pushing for this systemic change, which will benefit the U.S. defense industrial base and the middle and working class. However, there are powerful people vested in the current system who will resist this change. Despite this, the argument for change is becoming increasingly compelling, as the U.S. is struggling to produce artillery shells and the defense industrial base is hollowed out. The shift towards a more concrete economy will also lead to an increase in manufacturing, not just of weapons, but also of other goods and infrastructure. This will create a virtuous cycle of growth as the demand for goods and services increases and the economy becomes more self-sustaining. The Trump administration's aggressive moves, such as imposing tariffs, are a reflection of their understanding that this change needs to happen quickly. J.D. Vance, in particular, is seen as a politician who understands the big picture and has a holistic view of the economy. His experience growing up in Middletown, Ohio, and seeing the hollowing out of the town has given him a unique perspective on the need for change. Vance's exchange with Jerome Powell, where he questioned the Fed's policies, is seen as an indication of his understanding of the need for a more concrete economy. The CIA and other powerful interests may not want the public to own gold, as it would undermine their control over the financial system. However, the shift towards a more concrete economy with a focus on gold and manufacturing is expected to continue, driven by the need for a more sustainable and self-sufficient economy. The U.S. is at a critical juncture, and the choices made now will determine the course of its economy for decades to come.
Luke Gromen and Tucker Carlson also discussed the topic of Germany and the EU, with Carlson noting that the Biden administration blew up Germany's natural gas pipeline, leading to the deindustrialization of the country.
Gromen agreed that this was a shocking move, and that it's hard to understand why the U.S. would want to destroy Europe to access the complete 22-minute summary and unlock detailed insights for each topic discussed in the video. Please subscribe to quick podcast summaries on Spotify and Apple Podcasts with free trial, and enter just for the price of candy in most places. Happy listening.